Bien, on va pouvoir commencer et donc j'ai le
So we're
plaisir
about
de
to
vous
start.
présenter
It's my
Nic,
pleasure to introduce
directeur du
Nic,
BIPAR, qui va nous
manager of
proposer
BIPAR, who
la
will
vision
introduce
européenne des
the
prochains
European
steps qui
vision
nous attendent
and
liés à
of
l'Europe.
the future evolutions waiting for us in Europe. Nic, I leave you the floor.
Merci beaucoup Nathalie, merci
Thank
Berthe
you very much,
et
Nathalie.
le
Thank you,
conseil
Bert.
d'admin d'APCAL
And
pour
thank you
l'invitation.
to
Très
the Board of
content d'être là,
Administration
merci
of
d'être venu
APCAL. Thank you
après
very
le
much for
coffee
being
break.
present
Je vous
after the coffee
conseille,
break.
donc ceux qui
So
veulent écouter
let
en
me give you an
français,
advice. If you want
il y
to
a des
listen
casques
into French,
et si
there are
vous voulez
headsets
voir
here.
clair
And if
pendant
you
ma
want to see
présentation, vous devez sortir ce casque-là.
clear
Merci au
during my
sponsor d'ailleurs,
presentation,
c'est super.
use
Voilà, mais vous
this
en aurez
helmet.
besoin, je crains.
You'll need it
Mais après,
afterwards.
vous attendra encore
But
Berthe et
after my
puis des
presentation
boissons,
will be
donc ça c'est très
Bert and
bien,
then a
hein,
drink.
pour un tout petit
So it's
peu,
very nice
je dirais,
to
calmer les esprits.
quiet a little
So,
bit
ladies
your
and gentlemen,
spirits.
thank you very much. BIPAR, European Federation, APCAL, important member. We have about 50 of those national members in all the EU member states, brokers, agents, and financial intermediaries. You can look that up on our website. I'm going to try and be shorter than what was proposed. I had initially 2 hours, and then they said, well, you have to reduce it because there is a panel before you, but it was a very interesting one, so it was really very interesting and good. This is your regulatory framework, more or less. And this is coming out of Europe. Now, if it had not been from Europe, it would have come from your own national legislator, and then it would perhaps have been even worse. Now, the thing is with these rules, and there are some missing, for example, everything that is company law and so on, and but that is proper to everybody, that is common to all companies. But for our sector, these are very specific rules that are applicable. The General Data Protection Rule, AML, you have sustainable finance, you have the Capital Markets Union, Solvency II, MiFID II, IDD, IDD, you know what it is, insurance, what is it, Insurance Distribution Directive. And then you have until now the Distance Marketing for Financial Services Directive. And I will tell you that is all changing. So when I present this to regulators or politicians at European level, they say, yeah, it's really a very highly regulated sector, I agree. But then we start explaining that this is not a stable framework. For example, with regard to sustainable finance, you know that all this is still very much in evolution, but we already have to comply with the rules. Very concretely, EIOPA, for example, last week launched a consultation on the SFDR. Now, the SFDR is not yet fully implemented in the national legislations, but they are already thinking about changing it. Try to work in an environment like that one. It's really not easy and certainly does not encourage, let's say, investments or does not encourage also financial stability for the sector and does not encourage a long-term outlook, I would say. So then we have DORA. DORA that interacts, for example, with all the rest, because that is the Digital Operational Resilience Act. Now, last year I told you that we were discussing to try and have us out of the scope because we had calculated that for each intermediary office agency, it would have a cost of about 25,000 euro per year in order to be compliant with DORA. Yeah. Now, I can tell you they listened and they indeed exempted us from the scope. Yeah. So all SME intermediaries with less than 250 are out of the scope. And for all those that are in, we are discussing with the supervisory authorities a kind of more proportional framework. Now, the reality is that we will all work in networks over a couple of years. So once this whole system is up and running, we will be probably also resilient in terms of digital security. This DORA is going together with the GDPR, so where the GDPR is protecting the data of the client, DORA is in fact imposing rules upon the insurers and the larger intermediaries and all banks, rules with regard to infrastructure in terms of networks, Wi-Fi systems, and so on and so on. Almost military rules, which of course, when you see now the new situation with wars and so on that are also fought digitally, we have to protect ourselves against this kind of attacks. Then we have, of course, also the Brexit that brought for markets that are working internationally, like Luxembourg, that brought also some, for some at least, some reflections and some difficulties, perhaps. We then are in, as I said, the Distance Marketing for Financial Services Directive. I just received a message this afternoon that IMCO committee within the European Parliament has now approved their adaptation of that legislation. So that means that there will be, in general terms, we will send you more details to APCAL on this, but there will be a 15-day cooling off period for everything that is bought, for every financial product that is bought online at distance. 15 days cooling off period. That for a travel insurance, for example, that's very good. We can all travel for the 15 days and then we stop the insurance. Perhaps. Well, we will see the details. But okay. So, but what I want to show here is that on top of that, so not only this framework, we have many rules that apply to us, but also these rules are not stable. There is continuously. These rules are continuously changing. And one of the reasons why these rules are continuously changing is because there are more powers to the supervisory authorities who at national level are still supervisors, but at European level are more regulators than supervisors for the moment. So also there is a shift, but you know, the role of also national supervisory authorities in the regulatory framework, they are really advisors to their ministers, they are working on regulation, and they are developing all kind of rules and levels of rules with nuance and detail. So then, of course, GDPR and AML, you know that also in terms of anti-money laundering, I heard what happened in Luxembourg, so there is here and there a little bit of, you know, an extra incentive to go for it, and then in other markets, slight different rules. The AML directive framework is also revised at European level. Now, okay, that's an international aspect, and I believe that we should really be seen as a sector, I fully agree, we should be seen as a sector not to contribute to any terrorist or money laundering activities. The question may be whether the framework is and remains also efficient. There may be other ways to, for example, deal with this. So, I come back to this slide because you see that it's already getting a little bit flou, comme on dit en français, and I'm really sympathetic with all of you because you have in your business, you have to be compliant and adapt permanently your own compliance to all this. And we as associations, we have also to see clear in this framework, sometimes where even politicians or even at European Commission, they work in silos, but we have to see this, let's say, cross impact on our sector. So that is also a little bit the role, not a little bit, this is an important role of an association. And with Nathalie and Bert, we work on that. And with other associations, we work on that to try and make sure that we have always a very good insight in what the potential consequences could be. And then we flag that to the politicians and to the regulators, because you don't have to think that these people have bad intentions. That is not the case. They understand also some of our reasonings. Sometimes they agree, sometimes they do not agree. In the end, they are responsible for the politics that are decided upon. So, provisional conclusion, as I said, a dynamic environment also in terms of supervision and regulation, which is making our life absolutely not easy. Now, tabula rasa, because I want to start from scratch, because now I'm going to have a quick look into the future, what is going to come. And we have two concepts that are coming. I still call it concepts. It's the RES. It was already mentioned, the Retail Investment Strategy. And the Retail Investment Strategy will have an impact on IDD, MiFID II, and PRIPS, and that is currently on the table. This morning, just a little insight in how this works. The European Commission comes with a proposal. The proposal is sent to the European Parliament and to the European Council, so to the Member States and to the European Parliament. In the Council and in the European Parliament, there are committees that are set up. And here for the RES, the committee that is in charge for this dossier from a European Parliament perspective is the Econ Committee. And then within that committee are, for each political party, appointed a rapporteur. Be a bit more precise, one rapporteur is taking the lead, and the 4-5 other political groups appoint what is called a shadow rapporteur. And basically these 5 people, they define and they discuss the detail of the text. And that is true for every European regulation. Yeah? And then that goes to the plenary of the committee, and then that goes to the plenary of the European Parliament. In the meantime, at the Council level, the Member States are sitting together. That is also why I made this comment today, because I know that Thierry Flamand is involved in this kind of discussions. Yeah, so that is the context of my comment. It was absolutely not to criticize the panel or people who said something or thought that they said something about it. Absolutely not. It is just to make that point in presence of let's say people who are now holding the pen and who contribute in the discussions here at national level, but also at the EIOPA level, because well, EIOPA has also their say in this kind of discussions. So this is what is going on. At council level, the current presidency is Spain until December, and then it's Belgium. And then we are in June, so on the 9th of June, European elections, and that means that by the end of April, if this text is not through the system at European Parliament level by the end of April, then it may be that this text will go back to the Commission, and then we have elections, and then we have 2 to 3, 4 months that the European Commission will set up, that new members of the European Parliament come in, who may have a completely different vision of what the political line must be. And that is how it works, and in the meantime, Council and Member States are working on it. So if somebody says this is all the fault of Europe, then please, that is absolutely not true. This is something that is unacceptable, and I always say it when I speak in front of our associations or elsewhere, because your national government has as much responsibility in European rules as Europe itself. There is no text that passes if national politicians do not agree. The problem is often that national politicians think not in the long term and know that they will not be in charge anymore once the European text comes out, and then it's of course Europe that did the wrong thing. So please create awareness, especially in this period of elections. Create awareness, and I know that there is a politician in the room, which is very highly appreciated. I hope he is listening. So that is very good. We really have to create awareness with our governments that they are responsible also for this. Okay, so this is RES. I come back to that in a little bit more detail if you are interested in it. But this comes together, and that at the end of a mandate, after 6 years, McGuinness had 6 years to get all this through, and now all of a sudden it's coming there. It's coming together with open finance, and open finance, basically what it says is that every insurer will be obliged to share the data that the insurer has on the client, with the consent of the client, to share it with any other party, Amazon, app creators, banks, whoever. If the client agrees. Again, for the moment, intermediaries are exempt because we cannot comply with the DORA requirements. But it is not clear whether, even when we are exempt, that it cannot impose upon us to still share the data. And then, for example, when you go into the nitty-gritty, let's say, detail of the text, then, for example, it also says that including the data that are used for the suitability test, including the data that are used for the demands and needs test. Sorry, that are our data. Okay, this is not from the insurer. So that is what we are working on now with the Commission. This text will most probably not pass because this is really a big thing. And this is all about data, the digital agenda of the European Commission. So that will probably go to the next mandate. But still, we are very careful. So we prepared our comments on this, and we are in close discussions with the Commission and members of the European Parliament and the Council to try and explain what the issues are with this text. So, let's say more generally, with this open insurance and open finance framework, the issue is also that you are going to allow data managers that are not regulated in IDD and that are not regulated as an insurer and that are not regulated as a bank, you are going to give them access to certain information that is collected in the framework of an insurance contract, a bank contract, or mortgage contract, or whatever. So we are questioning the entire thing, but okay, we'll see where it goes. And that is something that we have high on our agenda also with our national associations. Then I come to this famous retail investment strategy that was launched, and you have to see this in the framework of a broader context. It's the Capital Markets Union. The Capital Markets Union is a dream of, let's say, Europe, is to make sure that capital can, let's say, move much more freely around the European Union. Then there is the problem that, of course, there is a lot of money that is on the saving accounts of Europeans. Now, when the Capital Markets Union was launched, they said, oh, but that is not good because you have 0% interest rate on your saving account. The world has changed in the meantime, but still they need money because they need money, as I already said, to finance the transition into the green economy. They need money also to finance, let's say, well, the fact that the population is becoming older, and that will have consequences in health, that will consequences in retirement, that has consequences in a variety of issues. So that is this Capital Markets Union that they are dreaming of. That goes together with the sustainability. You all know now how the mess that is introduced into the IDD and MiFID II rules, where you have to keep in mind the sustainability requirements of the client, and then says the client, oh, I would like to have an investment portfolio with 30% of sustainable products in there. And then you have to say, the maximum we can offer is 3-4%. You know, and if everybody would ask 3-4%, then there would not be enough investment products available in the European Union. Okay, it's all good projects in the longer term. We have to live with it. I think the intentions are very good, but it's all in the detail, and we have to live with it in the meantime. So all this goes together, and then you must see the retail investment strategy in that perspective. Okay, so when you look at the procedures, as I already said, it's now in the European Parliament on the one hand. Madame Jon Courtin, who is a Renew politician from France, just published this morning her report, provisional report on the proposal of the European Commission. And then, well, as soon as the Parliament is in agreement and as soon as the Council is in agreement, what then happens is that Commission, Council and Parliament are sitting together. They sit in the so-called trilogue, and there they fine-tune the text. So up to the very last minute, this kind of things can change in every direction. So don't panic yet, but it's interesting to see the concepts that are introduced. I'm going very quickly over it because, as I said, things may change. But as I received this at noon, the text of Madame Jon Courtin, I had a couple of people in my team who sent me a quick analysis. It's a 30-page document also, so voila. So I'm going to try not to tell you lies. I'm going to be prudent, but I will give you a little bit of information on what may have changed. What you have to very well understand is that the retail investment strategy is focusing on the IBIPS part, so the insurance-based investment part of the IDD. In the IDD you have two parts, the general part and then the part that is with rules that is applicable only to IBIPS. I think that Luxembourg's national legislation is reflecting this logic. This being said, the Commission has decided to put in there, out of the 26 articles that are there for the non-life part, so for the general part, they changed 16 articles without any impact assessment, without any consultation. I'm not saying that all these changes are bad. Again, they are with good intentions, but the principle of good legislation, I believe, are not lived up with. So we have to see what is going to happen there. It is about retail investment strategy. So as I said, it's about IBIPS, what I'm going to say. It's not non-life. Okay, so I'm going to focus on the IBIPS part. I can give you a couple of examples that are having an effect on both. So that also for non-life. For example, they changed a couple of definitions like digital marketing, because as I said, the idea is to bring the digitalization into the existing regulations. Reporting requirements. If you have more than 50 clients cross-border, you have to report everything to EIOPA. We will see. Professional training will develop. We understand that the world is becoming more complex. Okay, we will see. Electronic format by default. Very interesting, but I was last week in Poland, and for example, there you cannot yet show a digital green card when you are driving your car. So I don't know how you are going to do electronic format by default for example, if you send the green card, which is one of the proofs of insurance still until yeah. So okay, these are things that are not really thought through, but I think okay, we can of course live with the principle that documents can also be digital. That's a different story. I mean, quite good. And then a couple of exemptions. Okay, not too much detail on this. Then what is very interesting that is in this text, I said to you that there is an increasing impact of supervisory authorities with level 2 and level 3 rules. Well, in this RIS, they really went to all records. 17 mandates were given to the supervisory authorities to interpret, or the level 2, so that is then via supervisory authorities and the Commission, and level 3, 17 concepts to be fine-tuned without democratic process. I see Carlos laughing because Carlos is a former, you must know that Carlos was Secretary General of EIOPA until a few years ago, so he knows what I'm talking about. But it's incredible because this also takes away, of course, the subsidiarity principle. Member states will not have the right anymore, if this goes through, member states will not have the right anymore to adapt certain concepts to their own national legislation. So, I'm now going to the IBIPS chapter because that was the chapter that I was not going to talk about, that was the general one. I give a few extracts. So you have to inform your client whether or not you give advice on an independent basis. Whether your advice is based upon a broad analysis, we can, I think, live with all that. Periodic assessments, that will be interesting because that is, of course, something new. Then the independent advice, we will see where that goes. You know that in the MiFID II text, if you inform your client that you give independent advice, you have a ban on commission. Yeah. In the IDD, for the moment, if you tell your client that you give independent advice, the member state may decide to ban commissions or not. Okay, so that's a little bit the difference. Perhaps that here we will be confronted with independent advice, and then you have the entire discussion in German, for example, and even the text, because we looked in the text and in the translations of the text, and there, for example, the word independent in German is once unabhängig, and another time it's something different in German, and it's all contradictory. But okay, it's the concept, it's political now, and we will see where it goes. But it's very confusing. And then, in fact, this risk proposal from the Commission starts, in principle, from a ban on commission. Now, some people will say that is not true because indeed McGuinness in September last year, she started all of a sudden saying that she wanted to introduce a ban, a total ban on commission. Okay, everybody was against, or most of the people, except of course the, well, one federation that is saying to represent the consumers at European level. And also the socialists seem to think that in the European Parliament, the socialist group seem to think that ban on commissions would be very good, especially for smaller savers. Very strange, because the commission system just creates the mutualization effect so that people can use the experience from the richer and to share it with, let's say, those smaller investors. But okay, it's like this. So that is what it is about. And then the proposal introduced a kind of non-ban of commission, where advice is given, but only if that advice is complying with a number of requirements. Where no advice is given, ban on commission. Yeah. But where advice is given, the text says, yeah, you can have a commission under the condition that you can show that you are working in accordance with the best interest of the customer. And then, in order to prove that you work in the best interest of the customer, you must do a suitability test, of course. And then, from the products that you have identified in the suitability test, you have to make one recommendation. Then you have to recommend also, I don't know if you can imagine as an advisor to recommend 3 things to your client. I think you only can recommend 1 thing to your client. I don't know. It's very interesting. Then you also have to recommend the cheapest product out of that. Don't care anymore whether it is adapted to the needs of the client. Don't worry anymore about the suitability test. You have to recommend also the cheapest product. Very strange. And then you have to propose a product that does not have the features that the client may not need. Sorry, but if you do a suitability test, you don't offer a product to your client that has features that the client does not need. So this is total. And then the 4th point is, when you are in EBIPs, then you also have, of course, to do a demands and needs test for insurance products, for the insurance part of the EBIP. I have nothing against that because that is already in the IDD. So, but that are the 4 requirements that you would have to comply with. So, of course, now, okay, don't misunderstand me. This is also a text there to provoke reaction. So we don't think now that I'm saying that those who wrote this did not know what they do. It's quite on the contrary. They just make a kind of possible concepts that they built in order then to leave it to the co-legislators to make a choice. Yeah, and so from that perspective, we have to see that also in that context. But it would be interesting to see where it goes. Now, I can tell you that already on 4 points that are in the RES, there are 650 pages of comments at council level, only on 4 subjects, and today they are sitting together on the more, let's say, difficult points like inducements, like benchmarks, and so on. And in the parliament this morning, the lady I was referring to, so who is the rapporteur, Madame Yon Courtin, she issued her report, and she, for example, she said no benchmarks, no ban on inducements, and instead of the benchmark, she wants to introduce a better disclosure of financial market data. So the democratization of access to financial market data, which is a completely new concept, well, completely new concept in this context. So of course you can see where all the discussions are going now. We will see what this is going to bring. So don't worry too much for the moment, but I believe what is interesting is, and that is why I'm saying it, these things are living. So if it is not now, then it will be somewhere in the future that certain of these aspects will come up. So that is the only thing that I want to show here is value for money, as was discussed. Even if this does not come in, let's say, level 1 regulation, it is already there because the supervisory authorities use it. Benchmarks, we all know that for some of these products, benchmarks are used in their analysis in the supervisory authorities. They don't make them public. But okay, there is a difference between a public benchmark and a benchmark that is used for analysis by the supervisory authorities. We are in favor of better disclosures. We believe that as intermediaries, we cannot made responsible for interpreting cost efficiency. We cannot become the benchmarkers. We don't have an insight in the costs and the architecture of the products that are manufactured by the manufacturers. So you really have to make that distinction between manufacturers. If you are a manufacturer, then you have to take your responsibility and know what you are doing. But if you are an intermediary, you have to be able to rely upon the information that you receive from the manufacturer about the product, both in terms of cost and in terms of quality. And there I believe there is still something to do. And I think everybody agrees on that. That is not blaming anybody, but I believe it much more efficient if we bring these concepts to the level of manufacturing in the POC process, as where it is already supposed to be, rather than bring it at a lower level, where it is, of course, much more difficult and much more expensive also to first supervise, but also to implement in reality. So, I believe that with this, of course, the management of conflict of interest rules is always on the agenda. And I believe that with this, I'm going to leave it here because I touched upon, I believe, the most radical or the most of the changes that are there in there. The marketing communication I already mentioned. For example, there is there a requirement that you will have to keep your records for 5 years for whatever publicity that you make. Okay, now what Mrs. Jan-Courtin brings in is, for example, also differently from the Commission's proposal is, for example, the finfluencer. So if you use finfluencers, that's an issue. You see, so people cannot make false information. Social media influencers, people who are saying this is a very good product. You know, we all know to what this led a couple of years ago. So that is something that Mrs. Jan-Courtin would like to introduce. So as I said, all these level 2 and 3 measures is perhaps a little bit too much, in particular because it's about very critical concepts in the text. So now I invite you to pick up your three-dimensional glasses there, because this is indeed now what it is all about. All this is mixed together, all at the same time. We don't see how an impact assessment can be made, and we believe it's not necessary, because as was discussed this morning, they can identify where there are problems are. The supervisor has the power to intervene where there are problems. So why does the supervisor not intervene? And why then should the entire sector again change rules? Because in some markets, for some products, something went wrong. With this, I leave you for further thought. As Carlos said, it's only for thought. Thank you.